It's a surprise. It's Sanjeev's surprise today.
And you surprised? Is he? Yeah, really? He's that quick, is he?
So, Simon, we want to flip things up a little bit.
Price action is actually just an indicator.
You have to know your strategy. You have to know what your average win rate is over a period of time. You don't get a reset button. If you make a mistake, if you get slipped, if you lose a big chunk of money, you don't just reset and buy another challenge.
I need to find this in the chart. I need to do this in the chart. If the chart doesn't do that, I will not make a trade.
The point of analysis is not to give direction, is to state the facts exactly as they are.
Sure, my wife loves the dog more than me.
I think it would be a good opportunity for us to ask.
Good morning, Sanjeev.
Good morning.
Thanks for doing the interview. I'm Simon, by the way, so sometimes I forget to introduce myself. So
Appreciate
right,
it,
Sanjeev.
Simon.
Yeah,
Oh,
no worries.
I think we have a guest.
I think, hang on, participants, Leonardo. Here we go. Oh, he's come in. Oh,
Yeah.
Yeah.
I must have waiting room off, so everyone's.
Yeah, it probably worked in my
surprised.
favor for today.
Yeah. Morning, guys.
Hello, Simon. Nice to meet you.
Morning. Nice to meet you, Simon.
Is
So
it-
Simon,
yeah,
this is Leonardo and Pietro. We're going to be your three guests today. So today is the 100th episode special. We want to start off just by doing, I guess, the normal format of the trader interview, but we kind of want to keep this a little bit of an open roundtable. So if you want to host in your normal way, but just fire out questions across the three of us, and we're just going to keep this an open discussion and see where it goes.
All right. Okay. All right, guys. Well, nice to meet you all. Let's get started. So, right. Morning, Sanjeev. Morning, Leonardo. Morning, Pietro. Right. Let's do a round robin, shall we?
Yeah.
Let's all introduce ourselves. Tell us a bit about ourselves, where we're living, where we're from, how long we've been trading, and then we can start from there. Okay. I'll let you guys.
Okay, cool. I'll probably kick off. I'll lead the way. So I'm Sanjeev. I've been trading since 2012. Spent a lot of that time struggling and learning my lessons. I started finding my feet, I would say, in around 2018. At least that was the point I stopped losing money, like long term.
Yeah.
I started getting into psychology quite heavily in 2019. And then going into 2020, I wanted to go down the life coaching route. And I kind of accidentally fell down the route of just working with traders, primarily with their psychology. That was my biggest battle. It was my biggest hurdle when it came to my trading as well. So it felt only right to kind of follow that up. And it works quite closely in tandem with obviously what I do in the markets. So I kind of spend the bulk of my time doing that at the moment. I work with traders purely on the mindset side, and I spend my time trading. And to throw out there, for those that don't know me, I'm based in London, UK, at least for the time being. Yeah, I think that's a short and quick summary of me.
Great. Okay. So your history was in psychology, and you came back into that in trading, or?
So I never did it at school. It was something that I got into later into university, and then carried on after that for myself. I specifically studied and got some qualifications NLP. I don't know if anyone's familiar with it.
Yeah, neuro-linguistic. Yeah.
Neuro-linguistic programming, exactly.
Yeah.
So I kind of use a lot of techniques for that and I tie that into like a bit of a coaching framework, and that's what I work with traders.
Okay. Well, interesting stuff. All right. Let's move on. We'll come back to you in a bit. But Leonardo, shall we move on to you?
Yeah. Well, I'm Leonardo Hisio. I have been like maybe 6 years making trading. But yeah, my history started from 200 to 2019 maybe. I was with a mentorship with a person in the United States, and it was so difficult. Like maybe for all person who started in trading, like maybe all person start with pyramidal stuff, like
Say
making
that again.
stupid
Didn't quite
money.
catch that. What was that?
Yeah, it's like a pyramidal stuff, or like who person invite to other person to earn money, and like it's you will do like money about that.
Pyramid scheme.
Yeah, I know.
Yeah.
Ponzi and all that.
Like a scam. Yeah.
Yeah.
So I started with that, and then I lost so much money, maybe 400 for me is like so much when I was like maybe 17 years old.
Yeah.
And then, well, I started for that mentorship in the United States. and I was nice. I was started to earn money, like maybe 100 and then 200, and then I would start to grow my account, and then I scrolled with funded next, like to the funded accounts. So that's for me was so nice.
Great.
And
Okay.
yeah, that's so nice for me.
All right. So you're funded with FundedNext?
Yeah, maybe
okay.
one year ago.
Yeah.
No, I'm based on Cancun, Mexico, but I live in Argentina, so I travel so much. So yeah, that's nice.
Great. All right. Good stuff. All right. Right, Pietro, introduce yourself, please.
Nice to meet you, Simon. Yeah, I'm Pietro Fioraso. I'm Italian. I'm actually half Italian, half Croatian, and I've been trading for close to 4 years now. Recently moved to Lisbon with
Nice.
profits from trading, with only profits from trading, and I've been
Very
here
nice.
now for 6 months. Yeah, almost 6 months. And yeah, my journey started with, as usual, with low quality mentorships, signal groups. Let's call it that way.
Low quality mentorships. I like your style.
Yeah, yeah, and
Always be polite.
yeah. But actually, I believe the intent is close to never, almost never bad. People try to actually teach what they know.
Yeah. Mm-hmm.
And that's what, and a good thing that I developed recently is learning to learn. So what to pick up from everything. So I'm studying more stuff now than I was 4 years ago.
Mm-hmm.
Even stuff that I know it doesn't have the solutions that I'm looking for, but maybe it has the questions that I don't have yet. You
Yeah.
understand? So
Okay.
yeah, it's been a long journey. I can say it's been a long journey because I recently turned 22, so 4 years of my life.
I think you
Yeah,
might be the
and
youngest out of us. I don't know.
I don't know. Leo seems younger than me, so I don't know.
Yeah,
Okay.
I'm 21, but yeah,
Oh,
it's
you take the biscuit. Okay. Yeah.
yeah.
You're making me feel old here. Right, Pietro. So you're funded with FundedNext, yeah?
I'm funded with not just
Yeah.
it's always changing,
Yeah,
the
yeah,
game.
yeah.
Yeah.
With a few, always good to spread the risk. Yeah, okay. Not that FundedNext is going anywhere, by the way. So
Yeah, I don't think so too.
I think we're pretty solid in comparison to a lot of the firms out there. So right. Well, what I normally do now is we sort of delve into a little bit more of the technicals or your strategies. We're not going to share screens or look at dashboards because maybe you guys want to keep that private. That's fine. I understand. So, but Sanjeev, do you want to kick off with trading style?
Yeah, sure. So I guess if I had to paint myself as a specific type of trader, most people would classify me as a swing trader. I
Mm-hmm.
do the majority of my analysis from a daily perspective and kind of just take entries off the back of that. My
Yeah.
trading style and approach is probably most closely linked with supply and demand. It's really nothing complicated. I could probably explain it in like 2 minutes over a chart. But basic supply and demand, couple that with a little bit of price action, and I just basically follow momentum. I think a lot of my approach started to work for me because I stopped trying to pick tops and bottoms, and I just started to follow price after it turned
Never
around from
works. Yeah.
logical areas of supply and demand. But yeah, I think short, sweet, and simple was for me, and the rest of the battle for me, like I said, was psychological.
Psychology, yeah, of course, yeah. No, some of the best strategies are the simplest. So I mean,
Yeah.
overcomplicate it, you never take a trade. So, so more of a swing trader, daily chart, signals from that. Any particular assets your favorite?
Primarily trade FX. So
Yep.
I trade a lot of euro dollar. I trade GJ, pound yen.
Yeah.
I like a little bit of dollar CAD sometimes. I usually float between the three of those, but yeah, usually FX pairs.
Okay, interesting. All right. So majors and a bit of a yen
Yeah,
for
pretty
to
much.
spice it up. Okay.
Yeah, yeah. I like to keep myself on my toes.
GJ will do that. Yeah.
Yeah,
What
for
is,
sure.
what is it? I think Widowmaker is its nickname or something like that. So.
Sounds about right. Yeah.
Leonardo, tell us your secrets.
Yeah, my secrets. Now I have like a solid strategy with like so much person who introduced in trading. Maybe they started with YouTube videos that have so much strategy right now. But now before like so much mentorships, I use like so easy for me maybe. Uh, I'm just look for price action like Sanjeev. And it's like almost like supply and demand, but I just see the inducement on the chart, you know. So when the people it's like induced, so to one side I go to the other side, and then I put a position, I wait for a confirmation, and that's all. It's like all in the price action. I don't use indicators, and don't use not like that. But yeah, for me it's so nice because I have like I'm a day trader, so I have like maybe 1 in 6 risk. So it's easy, but it have like so hard like back testing to have that. But yeah, for me it's like if you wait for confirmation and you wait for the price action will be in the point, you can start just put the position, you know. So if instead if you just was waiting for make a trade and just wait for a position, and you want to make like a sell, and just want to make a sell in one point and you don't know where is the price, you will maybe have a stop loss, you know.
Okay, sounds like you're a more of a day trader, swing less than a swing trader. So liquidity as well. So I get a hint that maybe you're a ICT student or something of that.
I'm ICT student.
The good stuff. The secret sauce, apparently.
I'm about to leave the chat now. I can't deal with you guys.
We're delving into the secret stuff, so right, ICT. So what gave it away? You said inducement. Inducement's one of, I think, Michael's favorite terms, isn't it? So you're waiting for that liquidity hunt, and then you're looking to target the opposing liquidity. So nice. I like it. So
you can approach that one before.
Yeah, what's your favorite asset then to trade?
I actually do like FX as well. My favorite asset it's $0. Yeah, so I just try $0. It's my only pair.
Yeah. No, sometimes it's best to focus, isn't it, on the one and really get to know it.
If you focus on one, you can be like the best in that pair.
Yeah, I agree. I focus on the one myself. So I think you can really, certain assets have their own little patterns, and patterns are a bad word to use, but you know what I mean. So, okay.
Yeah.
So, okay. Pietro, do you want to give us your source?
Yeah, sure. So in my trading, I try to target specific inefficiencies. As you all know, the market wouldn't move if it was efficient. So there are many reasons why the markets move, and these are called inefficiencies. So I'm not referring to imbalance, I think, is what people call the inefficiency to it. Like it's a synonym for
FEG,
Twitter.
imbalance. Yeah.
Yeah, it's not. Yeah, I'm not referring to
Not
that.
Okay.
No. So I target specific inefficiencies. Like right now, what I'm developing is I'm targeting inefficiency of cyclicity, and I'm trying to couple that with inefficiency of liquidity, which is not targeting liquidity or resting orders. It's not that.
Okay.
Just want to make sure because it's a completely different thing. Okay. And and I revolve all my trading around that. So I develop my metrics. I know, like, I study a specific metric and I develop it, and I know when to implement it on my trading plan. So overall, I've done my positioning. It's like a technical term for this stuff, and all the metrics that I have in development right now, they will be eventually implemented during the repositioning phase, which can happen like every 2 weeks, every once in a while when you have something new that you want to implement. So yeah, my trading revolves around inefficiency of cyclicity. Yeah, so I can say I'm a day trader.
All right. So when you say cyclicity, do you mean time?
Yes, even though time is not real, we could say that.
Indeed, it's not.
Yeah, we don't measure time just with the clock. You understand? So this is like this is an order book mechanic. So markets really has structures. Okay, they come from the order books. Okay, and they have microstructures, and that's, you could say, fractal, even though I don't like that term, but it transposes with different rules like physics to different dominances. So it happens in the micro, it happens in higher realms, we can say.
Oh yeah. I see what you
mean.
And
that's why, and that's how I measure time. So with structures, that's what is cyclical, market structures. So for example, if there's an Asian range, it doesn't mean there's I'm not referring to Asian session. So when the minute it opens and the minute that it closes, I'm referring to the structures that develop and that define the Asian range.
Mm-hmm.
You understand? Yeah.
I understand. Yeah. Okay. So you're looking at a timed range, and you're looking how the price action prints in that timed range, maybe.
Let's say I don't look at price. I see through price action. Price action is actually just an indicator.
Yeah.
Price action is just an indicator. Price is just a fluctuation.
Yeah.
And also, it's decided some seconds before that we see it on the charts because it's how it works. Like for example, an institutional trader, somebody that worked in a hedge fund, he executes. He's not filled immediately. That's
Yeah.
why
Yeah.
it's price lagging.
Yeah. Yeah. Is that the whole
That's the
T plus
actual
one, T
market.
plus two? Yeah. Okay.
That's the actual market maker's job to put them in the markets. That's why it's lagging.
Mm-hmm.
Yeah.
Okay. Oh, that is secret sauce he's just given us. So wow. Okay. So what's your favorite asset? I imagine it's probably a US indices, is it?
So US index, no, because I do
No.
that on the Outlook. You mean? Yeah,
Hmm.
I do that on the Outlooks because it's the more versatile for people to look at.
Yeah.
Me
Yeah.
personally, for this specific plan, for this specific strategy plan that I'm using now and I'm developing, I'm focused on Euro dollar and GBP USD, just
Okay.
because the two of them, just because I can easily do multi-market analysis between the two of them. I can validate a structure on Euro dollar.
Mm-hmm.
Just like if I'm in doubt, I can validate it with GU because they're
GU.
literally the same. And if
Yeah.
they're not
Yeah.
the same and if they're mismatched, which is very rare, it's like it works like with options, touch, no touch. If one
Mm-hmm.
does touch, one does no touch. Yeah, the next time
Yeah.
it's
Yeah.
through the
Okay.
roof. Yeah.
So ICT would term that SMT. So you're looking for breaking correlation between correlated assets. Is that what you?
I think, yeah, maybe he would label that as SMT, but
Yeah.
SMT seems to me strictly price action based. So
Yeah.
if one does this and one does this, it's
Yeah.
SMT. And
Yeah.
mine is not, because maybe Euro dollar does 20 pips more than GBP USD, but they target the same structure. So it's not,
Oh,
they're
okay. So
still on the same
that
structure.
wouldn't be a divergence in your opinion, right? Okay, I
Yeah, yeah,
understand.
those are very rare, by the way. Yeah.
All right, that's good stuff. I like it. All right, back to you, Sanjeev. Let's move on to risk management, I guess, and that might be something that you can give us some insights into. And
Yeah, so I have a pretty simplified approach to risk management, but it covers three main areas. So this is something that I practice for myself, and it's something that I work with other traders in considering three factors when it comes to risk. I think most traders will start by focusing just on account balance, right? They'll have a simplified approach where they have a fixed percentage based on their specific equity or account balance at the time, and that's
yeah,
what they will choose to risk.
yeah,
So I consider that as one of the factors that I use. The second thing, which for me makes up a good way to determine your risk, is you have to know your strategy. You have to know what your average win rate is over a period of time. You need to understand what your expected period of drawdown is over a specific sample size of trades or period of time. And I think understanding that can help you to define what level of risk is right for you as well. And the third one, which I think is probably the least commonly spoken about, is your personal risk tolerance. Because I think everyone, depending on your background, your experience, everyone's going to have a different level of exposure to money.
yeah,
So I think most people understand the idea that risking 1% of $10,000 is completely different to risking 1% of $1 million. At least psychologically, it's a very, very
yes,
different thing. So I'm an advocate of starting around the 1% mark for a lot of people. I personally start with 0.5% to 1%. Again, depending on the position, I like to scale in and out of positions where possible. So that's kind of my fixed guideline. But again, the reason I explain this is not to waffle on. It's basically to give people an idea that I don't believe risk management is black or white. I think it has to be considered for the person. And those are the three areas I would look at.
yeah, exactly. It really does depend on your account size, doesn't it?
For sure.
Trading a $10,000 account has very little emotion compared to trading like you say, $1 million account. And
yeah, for sure. And again, it depends on the person as well, right? Depending on where you're from in the world, $10,000 might be a huge amount of money. It might be a very small amount of money. So your risk appetite, depending on that account, is going to be two completely different things. And that changes your mental approach and therefore your performance and results in the market.
I agree. It's funny because some people have a limit on how much they can risk. It's like a mental block, isn't it? Like, they can trade 99 contracts, but they can't trade 100. There's a real like barrier there. Like,
it's definitely. But it's ironic though, because I think there's a lot of people that think the way to make more money is you have to risk more. When actually, if you were to risk less and be less attached to the money at play, you'd probably end up making more money.
Yeah, exactly. You're not going to get scared out of the trade.
Exactly.
Which is the horrible thing, and then it reverses and goes in your favor.
Yeah, exactly.
We've all been there.
Yeah.
Right. Leonardo, do you want to give us your risk management style, money management, whatever you want to call it?
Yeah, my risk management, like for me, it's like too easy as well, because it's like, if you're a sniper, you have like maybe 2 shots. If you shot the first time and you was like wrong, or you shot in the wrong way, you maybe will be like scared. And as Sanjeev say, when you're scared, you maybe do like stupid stuff, and that's so you can do like a bad trade, and you can start to think about, oh, that will be nice. So that will do a perfect trade. This trade we in my position. So you will start to ask so much question. So I have like two shots. When I made the first one, the second one will be like more secure. So I just risk like 0.5% of my account every day, and I have like a risk management in my week. So I just have like 3 bad days. So if I have like 1 day and 2 days and 3 days in 1% risk, I just leave the week and start like doing back testing. And I think the risk management is so important, because the person who's like finding like the perfect strategy, like Pietro or like Sanjeev or like me, like finding the perfect strategy. But I think the most important thing, like the risk management, because it's like maybe for me it's the everything. Because if I don't have the risk management, maybe I'll risk 1% in one trade, and then I lost that trade, and then in the next trade I risk like 0.5, and that trade I win. So I win 1 or 2%. So it's not like so proportional about the trades. So maybe you will lose more money than you earn.
Yeah. I like what you said about having that sort of mental stop, or that stop in place where you have 3 losses and that's it. The week's done. Right. I'm going back to the drawing board, back testing. Don't let the revenge trading kick in, and don't try and win that.
Yeah, because so much person try to revenge the market. Like, I will win the market. I will try to do that, because maybe I lost that, and I will start to do other trade, and I will more money. And as Sanjeev say, like, it's so difficult when you start more with the prop firm. When you start with a prop firm, you have like account with $3,000 or maybe $5,000, and you say, yeah, it's just an account. Maybe I can lose that. But they don't make like a risk management with that. So I think that it's so important.
No, it's good. It's good that there's, by trading prop, you automatically get those risk management rules just brought in. Like, obviously with a personal account, you could just blow the whole lot. Then no one's going to look over your shoulder and go, naughty. But
I feel like, account, sorry to interrupt. I feel like that's a very underrated side of props that a lot of people don't think about. Like, a lot of people see the rules and the guidelines and the restrictions as a hindrance, but actually it's teaching you on some degree how to manage risk. Because like you said, when you're trading personal capital, which is what I've been used to trading since day one, you don't get a reset button. If you make a mistake, if you get slipped, if you lose a big chunk of money, you don't just reset and buy another challenge. Like, you have to crawl your way back out of drawdown.
No, it's much safer way. It's much more clever way of trading. It's like, why would you want to risk hard-earned cash, 10,000, 20,000, 30,000, however much of your own money, when you can just simply buy an account for whatever amount, $500, and then that's it. And then the rules are in place. You can only learn so much a day. It is one of the best features of prop, as well as of the leverage.
Yeah, and they sometimes think about the money. Just buy a challenge and say, I will do like 3% in this account. I will pass challenge, and I will withdraw all my money, and I will be like a profitable person. but they forgot about the process you need to pass, about the challenge. And yeah, I think so much person who I challenge is like, it's just $25, it's just $35, and I can last. But they don't have like risk management, and they don't think about it. And I think that the trading rules and in the FundedNext, it's for protect yourself and prepare yourself for a real account if you have a real account.
Exactly. Yeah, I know. It's good guidance. Pietro, do you want to give us your thoughts on risk management?
Yeah, there's a reason why risk managers, on average, on hedge funds are the most paid roles, unless there's unless there's like an amazing trader or analyst. Yeah, because without it, like the risk management makes the performance. If you start to think about in terms of performance, that's the point where you will start seeing serious results, because you can be profitable with, even if your strategy plan is very basic and mismatched, and you're not even targeting a specific inefficiency. With proper risk management, in working in terms of performance and performance cycles, you can achieve some results. That's the whole point. That's the whole problem. So yeah, as Sanjeev mentioned, yeah, there's a psychological barrier in terms of much you can risk, but also physical. Like for example, I'm risking X on 4 pips of stop loss, 40 points on euro dollar. Yeah, good luck doing that on 100 million of clients' funds. You cannot do that. Like that's why they have satellites that are more volatile, that have to be more dynamic in hedge funds. That's the whole point, because you cannot do some maneuvers, heavy maneuvers on trading in the way that I'm guessing we are trading right now on our prop firms. So there's that part. But also, yeah, so how I manage my risk, I like to do that right now, and I'm implementing that also my prop firms uh, in a professional way. So I'm implementing margin phase, scaling phase, and depends on prop firms. It's very hard to do the maintenance phase because they are very short periods where you can after which the account gets reset for the payouts. But yeah, the proper way should be margin scaling and maintenance in order to not mature too much debts and to tackle the operational debts. And I do that on now, starting doing that on also my platforms account. So all the accounts that I trade. Yeah.
You mentioned something. Can you guys hear the dog barking, by the way, or is it
a little bit? Yeah.
Should we just hold off for a second? I think.
Yeah, sure.
Postman's delivering or something, so she's never happy about him.
Yeah, this is your Ring doorbell.
Exactly. I don't need anything electronic. I picked up on something quite interesting you said there, Pietro, about the difference between, and this is another major advantage of being retail rather than institutional. We can just get in and out whenever we like, with very tight stops, whereas the big guys can't. So.
Yeah, I mean, we are never in, even in our brokers. Most likely, 90% of the time we are never in. That's the point.
No, virtually we're in.
Yeah, exactly. That's the major perk of being, not of being a retail trader, but having normal accounts. Yes. Yeah.
Okay. All right. Sanjeev, do you want to kick off with a little bit of psychology stuff? What do you think is most traders' issue when it comes to the barrier between being profitable and not?
So there's a couple of big ones, which I can tell you from my experience, I struggled with a lot, and I tend to see this now in a lot of newer traders or people coming into the industry now. The first one for me was accepting the markets are uncertain. That was a huge one for me. I spent a lot of time chasing my tail, trying to find the Holy Grail, and it doesn't exist, right? And I think the spiral it kept me in is I overthought every loss that I took, trying to find out and re-engineer and figure out what I did wrong, not understanding that ultimately it's a game of probabilities, right? You can do everything correctly, but it takes one thing to happen on the other side of the world that can completely change the dynamics of the market and invalidate all of your well thought out analysis. So I think from a psychological standpoint, until you truly accept that the markets are uncertain and everything that you do is a game of probability, you're always going to struggle to accept the drawbacks and setbacks in trading. And the second one is kind of closely linked with this, and I think it's thinking with a probabilistic mindset. I think if you learn to think in hundreds instead of ones, it fixes the majority of the emotions and impulses that you have in the moment. At the moment I started asking myself, every time I took a winning or a losing trade, I kind of got into a habit of saying, if I was to repeat this exact action 100 times over, what would be the outcome of this? Yeah. And for a lot of people, they don't know the answer. And that shows you need more data, you need more metrics, you need more journaling, something to show you what is likely to happen. That gives you a bit of confidence on the inside as well. That creates a lot of your foundation. But when you can answer that question, then you'll know whether you've done something right or wrong. Because the hardest part about trading is you could do everything right and you could lose money, and you could do everything wrong and you can make money. And the moment you're rewarded for doing the wrong thing, it's the start of all your bad habits. And if you never learn to pick up on that in the moment, and like I said, amplify that out over the next 100 trades, you'll never realize that actually you're going down a path which is going to lead you to a very poor performance in the long run. So if I had to sum it down, it'd probably be those two things.
That, I think the key there was, one of the key things you said was getting rewarded for doing bad things. So we all like to try and pick, well, maybe we all used to like trying to pick tops and bottoms, and sometimes it works. And that reinforces that bad habit, and then you do it again, and you know how the story ends. So
it's the same with overtrading, revenge trading, not using a stop loss. The moment you're rewarded from it once, psychologically you think that in the long run this will be okay. I can do it again and again and I'll be all right. And what we understood about risk management is, you get roughly 252 trading days in a year, but it takes one day to screw it all up. And if you neglect risk for that one day because of a bad habit that you've ingrained mentally, you're screwed.
It can set you back. Yes, years indeed. Yeah. Oh dear. Right, Leonardo. What do you think? Where was the point that where you became consistently profitable? What changed? Did something click, or was it just over a period of time?
When I start to be profitable.
Yeah, consistently profitable. Yeah, you get to that point where you're getting funded, you're making money every day. You're not. Well, not every day,
what changed?
Consistently. What was the tipping point?
Yeah, I think when I started to as Sanjeev say, and as I say, it's so much person is trying to find the perfect strategy, and me was trying to find the best strategy. But then when I started about my mental strength, when you have like so hard, and when I start to follow my steps, to make a checklist, I need to find this in the chart, I need to do this in the chart. If the chart doesn't do that, I will not make a trade. So when I have like a checklist and every day I make the same, because if you're a trader, you will need to do every day the same thing, and maybe will be like bored. But the market is like so uncertainty, so it's like so different every day. We have like the same fingerprints, so for me, I think that changed to me, and every day make the same. But for me, every day it's a new day for me, like a new profit, or maybe I will have a stop loss, but tomorrow I will not think in that stop loss. But the person who's like making a challenge, and they start the challenge from $10,000, and they have a loss, maybe 1 or 2 losses a day loss. They have like 2% down or 3% down, and then I start other day and thinking, oh, I need to recover that. I need to recover 3% today. I need to risk more money to recover that. So I think the person it's like thinking so much in the past, so much in the losses, so much about that. And for me, I think, that changed to me, because if every day you know, like, okay, I will do this because I know that's works, because you do back testing, you do the strategy, you learn a strategy, and that's works. Why you need to do other thing? So for me, every day is a new day, and for me, I hear in some place about so much person it's logging or it's backtesting in the failures, and they like, okay, I fail in that and I fail in this, and they learn about that, but they don't pass they just is still looking in the past. And for me, it's best to try to look in the success traits, and about that, maybe I have a success trait today, so I will learn about that. I will put my checklist. Okay, that's worked for me. I do this, and that's worked, and that will be like maybe for me like so nice.
Mm-hmm. Yeah, backtesting is the key, isn't it? So you're looking at tracking obviously the successful trades and the trades that failed as well. Is that what did it? Is that balance of like, well, this one failed. Why did it fail? Okay, I'm not going to do that again. But this is the way to go. So did you get statistics? Did you use packages to get these advantages? Any particular backtesting systems in place? Like some of the third-party ones available? No?
No, but just backtesting like every day, you know, like when I have like a day, I just backtesting about that day, how was the entry, like practice my strategy every day. So for me, it's like, I think it's the best way.
Okay, cool. All right. Pietro, have you got any, I'm sure you do, knowing you, what's your own bespoke backtesting statistical software?
I think backtesting, psychology, and risk management are all very much tied. Most people cannot accept that the strategies will just produce the performance that they are supposed to produce. Okay, so as long you go in detail, as long as you go more in detail with your strategy, you will that strategy's performance will be more predictable. Okay, so the problem with nowadays with people that I see on Twitter, even though I am not active, but I look and I see, the problem is people don't have trading plans. Like their trading plans consist in just a shopping list, even a poor shopping list. And then, of course, you cannot predict the performance because the rest that you're leaving is the space that you're not dedicating to detail in your trading plan. You are just leaving for psychological errors that you may be doing there. And that's the main problem. I can tell you, if you show me a trading plan, I can exactly tell you what the performance that plan is going to produce. And if I know the person, I can tell you exactly when that performance is not going to match the strategy's performance anymore. Okay. So what I had, you can call it psychological issues like in trading. So over trading and over risking for most of my career. And I solved them more than 1 year ago with starting to trade mechanical. So I started trading and devising like for 6 months. So from December, not this one, the last one, to June, I was actively looking for a mechanical strategies, and I do some coding. So being able to code strategies, I know what truly mechanical means. And I found one finally that could achieve some performance that was useful to me, trading with prop firms. Then by starting trading that, I completely annihilated any psychological issues that you could get because you exactly know what to do, what not to do. All the work was done beforehand, not during the trading session. You was just there to merely execute. And if it wasn't me, it could have been a bot, which I developed, but I don't use because it's.
Let me stop you, Pietro. Sorry about the dog again. Let me just, because this is
Don't
interesting
worry,
stuff.
don't worry.
I just want to. I'll come back in a second, but you wouldn't believe I got another delivery. So don't ask me what it is, but
It's a surprise. It's Sanjeev's surprise today.
Sanjeev's surprised. Really? Is that quick? Is he?
What's your dog's name, Simon?
Rosie. She's
Rosie.
actually a German short-haired pointer. She's getting on in the years, so which means she's extra grumpy when it comes to delivery.
Bless. How old is she?
Oh, I think 11 or 12. So
Oh, wow.
Yeah,
Nice.
yeah, she's grey in the face. Any of you guys got dogs, or you?
I've got a little Yorkshire Terrier at home.
Oh yeah.
I'll show you a little picture.
Nice.
It was his birthday the other day. Have a look at this guy.
How old?
He's 6.
6.
Yeah.
I usually give Rose a bone. I don't know about a cake, but there you go. Maybe I'll try. Try.
He gets more love than some of my family members, so.
Oh, dogs always do.
Yeah.
I'm sure. I'm sure my wife loves the dog more than me. So. I'll let her out. Maybe we'll get some peace and quiet. But all right, Pietro, let's kick off where you left off because that was interesting. Please continue.
Yeah. So the moment you understand how these three things work, it all comes easier. So operational debts matured by a specific strategy, the specific inefficiency that you could target, and its anomaly. Each inefficiency has its anomaly. When it's not present in the market, there's the anomaly. That's the definition. So when you understand that, you become able to match the metrics. And I'm not talking about the performance metrics like profit factor and stuff. I'm talking about the other metrics. You can match them and create specific strategy plans that consist not just with the trading part, but also the analysis part. So you have like your scenarios, you have your models, which you apply based on the scenario that presents, and also the speculative anatomy, how you enter, how you execute that model. And the moment you are able to do that, and you learn how operational debt works, you magically, in my opinion, uh, start looking at the charts and at trading in a different way. So you know this strategy is supposed to produce this. And maybe on this strategy, I have more room, the trader's window, to speculate better than some other trader that has the same strategy plan, which with mechanical strategies and trading bots doesn't happen. And yeah, I think that's the game changer, and that has been the game changer for me and overall understanding. Because most strategies that people show on Twitter, they are not supposed to be consistent because they produce pathological debts. And of course, you will have your heavy drawdown, your reference points in your equity line will get broken, weakened. It's normal because those are pure scaling strategies. They are not matching them with margin phases in order to work with the margin and then do the scaling. They are not doing any prolonging of the scaling when it goes good. So when the inefficiency is present, they are not doing maintenance on that strategy. They are very simple and rudimental strategies, and they do perform like they are supposed to do. Of course, some people, and I was one of those too, when the strategy plan is very rudimental and it's not exhaustive, of course you're gonna get tired and you're gonna start doing some stupid acts, let's call it that way. Yeah, that's the game changer in my opinion.
Yeah. I think mechanical is definitely something which we all need to be when it comes to trading. And like you say, programming an algo or a bot, whatever you want to call it, EA can actually make you think more logically about your trading. So have you written something in Python or PineScript to basically run?
Yeah. So I do that because it's actually one of the part of the research. When you do validation, there's not just scientific validation, there's also empiric validation. So you do want to write codes to validate your metrics that you develop. So yes, I learned like at my first experience with trading after the first week of the Signal group was learning MQL4 by myself. In 2 days, there was like a 40-hour intensive course. I did that, and now of course I know how to code in MQL5 because there's a little difference, but it's the same. I also know how to code in C, normal C, not C++ and stuff. So everything just comes easy when you learn new languages. And I can tell you, yes, this is literally right now, that was what worked for me. Started solving psychology through mechanical strategy. And I can tell you right now, I'm coaching 2 people that are on the team. It's not paid membership, it's not paid mentorship. They are just work with me for other stuff. And I teach them also how to trade. And I'm teaching them in 2 very different ways. So one man, I'm teaching him through this mechanical strategy, and we are going to implement and start doing all the proper work that you have to be doing with the mechanical approach as long as we can. Why? Because that's the best way you can teach to a beginner, in my opinion. Because discretionality has to be trained also. And whereas the other guy that I'm teaching, we won't go through any mechanical process and stuff. We are already like kicking in with discretion stuff because it's what he needs. You understand? So maybe some people will solve psychological problems in different ways than other people. I was very hot-headed, So I needed that mechanical approach in the start.
Mechanical side. Yeah, I know.
Yeah,
I think most people do. Most people will benefit hugely from just trading in a totally
I
mechanical way.
agree. I totally agree.
Discretionary trading is way too emotional, and for most people anyway. So, all right. Great. Thanks, Pietro. Sanjeev, let's back to you. Back around the circle.
Yeah.
Anyone needs to take a break or anything? You okay, guys?
I'm good. I'm good. Yeah.
Just checking.
Yeah.
I was trying to prompt a surprise there.
Yeah.
Secretly. No, not forthcoming. No.
Yeah. We're gonna leave that and see how we go.
Oh, okay.
Yeah.
Let's see. Normally in these interviews we share screens and stuff like that, but we're going to miss that today. So let's move on to, I don't know, a bit of track records, I suppose. What's how are you guys doing with regards to sort of funded accounts and things like that? Can we delve into progress with regards to?
So I'm happy to kick off because I've probably got the least to share from the funded side. I only trade personal capital at the moment. I've had I'm quite transparent about this. Like I tweeted about this recently. I've had a long battle trying to go down the funded path with the strategy that I use in personal accounts. And a lot of what I discovered was generally down to two things. So the first one is I trade a daily time frame, which means my strategy is very slow. It can take a while for things to play out and for me to get feedback on that strategy in terms of how it's playing out. If I'm doing it over live price action, it takes a lot longer. Sometimes I'm taking a handful of trades a month. So to get any meaningful sample size of data, it takes some time to play out. The second thing and the most important thing, which is differed my progress from personal capital to funded, is I'm forced in prop firms to have a different approach to risk management, which has worked against me, which is I'm used to a mentality of I don't blow accounts. I can't afford to with a personal account. I don't want to throw money down the toilet. So when I trade in prop firms, I brought the same mentality to this, which is I don't want to blow a single challenge. And so I tweeted, I think it was 2 or 3 weeks ago, that I'd had 2 challenges running for 12 months. And in the prop firm space, that's insane, right? And not a lot of people have challenges going for that long.
No.
They're both in phase 2, both in drawdown. And where I've been stuck is my strategy typically doesn't have a fantastic win rate. On a good period, it's about 35 to 40%. And what tends to happen is when I get into drawdown, because I didn't want to blow the challenge account, I would reduce my risk. As a result of reducing my risk, I would take my winners on reduced risk. And when I would increase my risk back up, I would then take my losers and basically end up in a break-even phase. So I would never break out of that cycle until I would get to a point where I went through a good winning streak and could scale back up and then take my winners. So I've been in a big battle, which is why I said at the start, like, for me, trading is it's an industry with no top of the mountain. There's always something new to learn. There's always a new way to evolve and something that you got to grow through. So yeah, I'm personally not funded at the moment. I've got challenges running, but primarily personal capital.
Yeah, okay, interesting. I think you're taking it the opposite way to a lot of traders out there who use prop accounts in a kind of disposable way.
But I would say almost to my detriment, right? Because if the aim of the game is to get paid, and in this industry you have to maybe do things a little bit differently, then either the issue is with my approach that it's not fitted for the prop firm space, or I should be working to maybe gamify things a little bit more and be open to maybe blowing 1 or 2 or 3 challenges, because then once I'm funded, I can go back to my normal approach on a very reduced risk, which would work fine.
Yeah.
So
yeah.
The issue is it's me. It's like I'm the first one to like hold my hand up and be like, it's on me. I've got work to do. So that's my journey so far.
Well, I mean, sometimes the goal is not just to get funded, because
agree.
That's not going to achieve anything if you just then go and blow it the next day.
Agree.
But
agree.
So there is something to be, what you're saying. There is something in it, obviously. But there is a strategy in just simply using these accounts as disposable accounts and just risking maybe a little bit more than you would on a normal personal account just to get to that funded, and then maybe reduce the risk.
And I think that's the approach I'm going down now. I got to be a little bit heavier risk at the start, be willing to blow maybe a few challenges if need be, but then once I'm funded, go back to a point of risk that I'm more comfortable with, and that is more sustainable for me longer term.
Exactly. Yeah. No, I think that's would work
I
for
want
a
to
lot
just
of
to
people.
add something to the
Sure,
Sanjeev
Pietro,
strategy.
please,
So
please
many
do.
people that, yeah, many people that, if they had your approach, your strategy, Sanjeev, they would just blame or the markets, or they would blame the strategy. Whereas you very professionally are trading it as you should. That strategy is supposed to produce that kind of win rate because it's an anti-martingale strategy and was actually very popular at the institutional. I mean, still is because either you're martingale or anti-martingale. But yeah, but that's the ultimate scaling approach, right? That's the scaling approach, and it should produce lower than 50% win rate. Otherwise, there's no point doing that. Whereas with the martingale, you're trying to achieve a lot of win rate, higher win rate at the cost of maturing so much debt that with one click you blow it all, right?
100%.
Yeah, yeah. So you're treating it very professionally, whereas a lot of people treating the exact same way as you do. For example, there's a famous video that goes around of an institutional trader. I don't know if it's true or not. I'm guessing it's not. But he's saying, yeah, I'm very much profitable. I was the best trader in my firm with a 5% win rate. And he trades the exact way you are doing. The exact way. It's anti-martingale. Maybe it's a bit exaggerated, 5%.
I was going to
But
say
still,
5%. You're going to need one hell of a risk reward, aren't you? Yeah.
yeah, but it's not ponderated. It's not ponderated the win rates. You understand? So of course you can have 5% win rate, but maybe they're all break evens or minus 0.5, you know,
Yeah.
0.05. You
Okay.
understand?
That was a big turning point for me personally, right? Because a lot of the idea of when people balance up win rate versus risk reward and work out what you need to be profitable, it's on the basis that you take full take profits and you take full losses. With how I manage risk, a good majority of my positions, I don't ever take a full loss from where my stop loss is. I'm cutting a position before that. And my take profits are sometimes exceed where I'm targeting and sometimes fall short. So it's, for me, it's not a very black and white. I would say, more of a discretionary approach towards what I'm doing now. Which means that what you see on paper is not always a reflection of what happens in real life. But yeah, I can relate to exactly what you said there, Pietro.
Yeah. The whole discretionary way of micromanaging a trade, I guess, can eliminate quite a few. 5% win rate maybe is possible. I don't know. It is. You say it does sound rather extreme, but who knows?
Yeah, but you don't check win rate. You check profit factor for that kind of approach. Win rate is you don't check that. That's why, like on Twitter, still, people just focus on win rate and risk to reward. Yeah, there's not just that. For example, with this approach, yeah, win rate is not an indication of anything. You look at profit factor, maybe. That's it. And some other stuff.
Pietro, it sounds like you're recommending that everybody stops viewing Twitter. Would that be a big recommendation?
No, I'm actually suggesting that they look at everything. So if I'm studying courses that I know there's no solution that I'm looking for on those courses, but I'm open to hear new problems that I don't have on my research table right now. I think everybody should do that. So starting to listen and learn in a different way. Don't listen to people for them to give you the solution. Maybe they have a good problem that you could be solving, and if you solve that, you could solve other problems. And maybe they phrase it in a different, in a specific way that triggers your mind and that makes you understand that you have to work towards something else. That's why I study also ICT courses. Understand? A lot of ICT stuff.
I knew you were an ICC. I knew you were an ICC student.
I'm not.
Pietro, I thought we were your friends.
We are. And the way I study ICT is not with his solutions. I think he's very superficial and they are of no interest to me. But the problems that he poses are very interesting. Like, for example, cyclicity. He talks a lot about cyclicity. In a wrong way, yes. But it's some of the things that he says can trigger your mind into working towards those problems. And when you solve them, you have strong weapons for you to fight the battle of trading, right? It's all about that. So listening and being able to keep listening at everything, also on Twitter. Also, people that don't make money, maybe they have doubts. Maybe they are solving some problems that you are not even considering. That's what I was That's what I would suggest to everybody. Just keep your ears open, and you have 2 years and one mouth for one reason. So to listen to double and to talk about it.
Definitely, that's good advice in life, I think, isn't it? Not just trading. What would you suggest the average trader looks into, reads? And I'm asking anybody here, really. What? I mean, there's ICT, of course, which we all know and love. Well, apart from Sanjeev, of course. But is there anything that you would recommend? Reading, books wise, courses?
So I'll kick off. I'll probably go with something a little less conventional because I'll go down the psychology route. I would recommend a couple of psychology books that are nothing trading related at all, but I think when you start to apply the concepts to trading can help you in massive ways. So the first one is a book called Thinking Fast and Slow by a psychologist called Daniel Kahneman. Fantastic book to help understand the human mind. The other one I like to tie in with that, very, very similar sort of context, is The Chimp Paradox by, I believe it's Steve Peters, going off the top of my head. But yeah, both great books to help you understand the human mind. And it really gives you an insight as to why we are so impulsive and reactionary to certain things that happen, especially in our trading. And I think once you get a little bit more knowledge around that, it can really help to change that approach for you.
Yeah, that whole fight and flight thing, isn't it?
Yeah.
Can we control our brain? Can we override it and just?
This is the thing. I don't think it's. I think a lot of people get stuck with that paradigm of thinking that they have to control their brain. And actually, the framework that I teach is it's less about control and it's more about changing your reaction. So it's about raising your awareness as to what the problem or pattern of behavior that you go through is, and then learning how to respond to it differently. You're always going to be frustrated. You're always going to feel FOMO. You're always going to feel anger, but you can choose not to act on it. And I think that's the paradigm that I adopted, and it works well for a lot of other people as well.
Yeah, the reaction is the important thing.
Correct.
Exactly.
No.
Okay,
exactly.
That's good. That's a great book, that Kalman book. Yeah, it's a bit deep, but it's good. It's good.
Very good.
Leonardo, do you want to give us your thoughts on where we should be focusing our attention with regards to sort of education or progression?
I really don't read so much books. For me, it's as I told so many person like in my community, I always say about it's not the habit, it's the person who like progress in about the habits. So if you have a habit like have a shower, a cold shower, or read books every day, or have a meditation, or have some stuff like that, you it's not about the habit like wake up 5 a.m. It's like about the disciplines you work and you do about that. So for me, it's all in discipline. About motivation, you don't have motivation every day. You have discipline. I don't have motivation every day to eat my food, because I'm trying to grow up. It's sometimes I don't want, but for me, I know that works for me, so I need to do. So I think for a train as well, it's not about the habit. It's not about if you don't want to trade and you don't want to follow your rules, it's not for you to train. But if you want to be a success trader, you need to follow the habits and have discipline for that. So for me, you can read so much books, but if you change your mind, you will not be a successful trader.
Habits, that's a key one, isn't it? And I'm trying to think of there's a book that I'm thinking of and I can't remember the title.
Atomic Habits.
That's the one.
Well, Atomic Habits,
Great book.
1% per day, and that will make for you like a so big change in 1 year, 2 years, maybe 3 years. But it's about discipline to have an habit every day and want to need to follow about that.
Yeah. What I liked about that book was being able to try and tie good habits with other things and then try and remove bad habits.
I think he calls it habit stacking.
That's it.
Yeah.
That's a good one, isn't it?
Great framework. Yep.
Pietro, can you give us your thoughts on where we should be focusing our attention?
Yeah. So again, I think that by looking at everything, you can get inspiration and solutions or new problems to your trading. For example, right now, if I was to choose exactly what expertise to add to my persona, it would be physics or chemistry for trading. I'm strictly talking for trading. So it's not about what you read. It's about how much you read and how much you can contextualize into trading. But for the people that I'm guessing that they're watching, that they want to make like the true next step in trading in terms of treating it as it is, so as a serious profession and as an not an art, because it's not an art, but uh, as the serious profession it is, and as a competitive profession it is, and compendious because it comprehends a lot of stuff. As Jim Simons said, I can take a physicist and teach him to grab the markets, but I cannot take an economist and teach him physics. That's why he had a lot of, and he recently passed away. That's why he had a lot of physicists and mathematicians and astronomers and stuff
Mm-hmm.
that worked in his fund, which was like the highest achieving in the history of hedge funds.
Yeah.
So the books that I would recommend for just for the people that really want to take it seriously, because otherwise, if you don't truly love the job, you won't like these books. If you are here just for the money, uh, I don't know how much people will last. But for those people, I would definitely suggest, first of all, every book that Taleb wrote,
Okay.
specifically
Mm-hmm.
the Incerto series. So there are 5 books, and there you will find everything you need. Uh, you will find everything you need for trading, and of course, you will expand. Like after that,
Mm-hmm.
by the way, more than 1,000 pages, so don't expect it to
No.
finish it in 1 week. But
No.
after that, there are many books that you can read. You can space into chemistry and physics or whatever. So these 5 books of Taleb, Incerto, and also this one that is not on the it's not on the plaque. I have it in Italian because I haven't been able to find it in English because apparently one collaborator of him wrote this book and he
Mm-hmm.
validated it. So
Okay.
this is like the 6th of that series. He talks about robustness and fragility and how each system, trading system, which is not necessarily a bot, can either be robust, fragile, or anti-fragile, and how to work in terms of uh, surfing the markets, let's say the cycles that present in the markets. So
Mm-hmm.
if there's a black swan, which is the title of one of these books, if there's a black swan, is your system robust? So are you resisting that phase? Yes, but it's not anti-fragile because you're not making money there.
Mm-hmm.
Yeah, if it's fragile, if you're losing money on a black swan, yeah, it's a fragile system. So there's not uh, one specific way to work. It all comes down into targets and objectives. If you have, and it's the same with risk management. If you're trading a funded account, let's say, or if you're trading a personal account, or if you're trading big clients' money, these 3 scenarios have 3 very different targets and objectives. So your performance cycles and your risk management approach will be very different. Because, for example, risk resetting your account, if you withdraw from prop firm or from personal accounts, it kills your performance. It doesn't help. So you have to be smart and understand how it works
Mm-hmm.
and start to working towards the path of managing operational debt.
Mm-hmm.
It's the same. It all transposes into risk management and into trading. I very much recommend these books.
Mm-hmm.
And overall, if you always read and expand your knowledge also about other stuff that's not trading related, but it actually is trading related. Everything
What
is
was the
trading
name of that
related.
book? Sorry, I missed it.
This
Oh, sorry.
one, the series is called Incerto.
Okay.
It's 5 books, and you can find it 5 books.
Mm-hmm.
This one
Mm-hmm.
should be the 6th. It's not written by him
Mm-hmm.
directly.
Mm-hmm.
Robustness and fragility. I haven't been able to find it in English. I wanted
Okay.
it in
Right.
English.
Mm-hmm. Yeah, no, I'm familiar with the Black Swan of his series.
No.
I've not read any of the others. Anybody else read any of the other 5 or no? But if anyone out there who doesn't know what Black Swan is, Black Swan event, of course, is something that we're not expecting. Like, I guess 9/11, I guess, or COVID, I guess, would be an example. But
For now, we'll see.
well, for now, well, a conspiracy theory coming out here, but no
Analysis.
analysis. Oh, do you want to give us a little insight, Pietro? What are we expecting? Nasdaq just hit 20,000. Seems like a good point for a market crash.
We'll see. We'll see. A lot of people try to give. The point of analysis is not to give direction, is to state the facts exactly as they are. And then, based on the facts, you can build your scenarios, which most likely can be opposite all the time. They will be opposite. So it's yeah, analysis just means to state the facts as they are. So yeah, I mean, we'll see. Crazy things happening today.
Definitely going to be crazy things happening this year because we've got all the elections happening. So yes, for sure, there's going to be a catalyst of something. Yes. Okay, guys. I'm going to take a little 2-minute break if that's okay. I'll be back.
Sure.
So I'll be waiting for the present.
Yeah. We're hardcore, Simon. We're here till the very end. Yeah.
You guys are younger than me. So
yeah.
I need to take a break every now and again, you
know. So Simon, we want to flip things up a little bit. I think the viewers, the audience that tunes in and watches these, they've spent a lot of time seeing you interview a lot of traders. I think it would be a good opportunity for us to ask you a few questions. Okay. For the audience to get to know you a little bit better.
Good job on the break, wasn't it?
Yes. So we want to start off quite light. We want to stick with kind of our usual format, but we want to dive inside the mind of Simon. So if you want to take a moment and just introduce yourself to the audience, tell us a little bit about you and your journey into trading.
Okay, right. That's right. Okay, journey started in 2016. I sold my Amazon business. Reseller, etc. I won't go into details, not trading related at all. Moved to France and decided that I needed to find a path to finance my life in France. Okay, so trading, live where you like, freedom, time, etc. Had a family, wanted to spend some more time with them, so trading was obviously appealing. So you know how it starts. You put some money in accounts.
Lose some money out of the same account.
He put some more money in the account. Finally, obviously, came to realize that trading is not that easy, and sort of took a reassessment. In Pietro's words, took some low quality mentorships. And some high mentorship and some high quality ones as well. Luckily, found the odd guy to find some inspiration from, not just trading related, but psychological stuff and but technical. Finally found ICT, much to Sanjeev's disgust. That helped me tremendously to understand certain aspects of the market, obviously the manipulation and all that, etc. But we don't need to go into the whole conspiracy side of it. And then obviously the prop space was also developing at that time, not too many around at that time. And then started to progress with those in a slow mechanical way. Built my own system using, at the time, it was Python, but I've moved on from that. And so really now I'm funded with a mechanical system which runs. Very rarely do I actually take a discretionary manual trade. Sometimes on a personal account, just to keep things a little bit interesting. But mainly I have a mechanical system built around ICT concepts and time. And that is what runs on these funded accounts. So mainly NASDAQ with the funded accounts. So NDX for the CFD guys, and then obviously NQ for the futures people. And yeah, so it's been a up and down, but consistency finally kicked in a few years ago. And yeah, and have a reasonable following on Twitter with regards to advice, technical analysis. So you guys want to quiz me a little more on anything?
Yeah, for sure. What so are you full-time trading at the moment? I understand obviously it sounds like from your approach it should give you a lot of free time if you're not doing a lot of discretionary trading. What do you do with a lot of your spare time right now?
I don't really most of the time we're out of the country. To be honest, we're in like south of France or something like that. So it's not. We've got a family, so most of the time I spent with the boys, mountain biking, sailing. So it's my week for trade. If I was going to be looking at my week, is a very small week. I don't tend to trade. Certainly not 5 days a week. I will be looking at trading later in the week, Thursday, Fridays, especially this week. Obviously, US Bank Holiday Wednesday, so that's just for me anyway. That's just something that I wouldn't even consider. But Thursday, Fridays are the days that I tend to focus on. These are the more dramatic days. You guys can probably concur from a mechanical perspective. Yeah. So yeah, it's a nice way of freeing up the whole getting away from the 9 to 5.
Yeah.
COVID and the lockdown, my life didn't change one bit. So it was life as usual. So
yeah, nice. I like that. Pietro, did you want to fire next? Did you want to talk a little bit about strategy?
Yeah. So Simon, let's expand a bit to the strategy. So you said you have a mechanical system, but you execute manually, or do you have a bot running it?
I use the bot produces signals. Okay. So
And you
and then
execute.
I will then execute, but very specific configuration. Like I say, Thursday, Fridays only. So it's not something that I've got to be monitoring 24 hours a day, and it only happens in certain time windows. So obviously after equity open, let the volatility do what it likes, liquidity grabs, etc., and then we start to look for executions sometime, normally in the AM session of New York, and then potentially in the afternoon. If it all depends on how the AM session, of course, printed. Sometimes there's different deliveries, as you're aware of, between AM and PM deliveries.
So I'm curious, do you wait half an hour after the equity is open, or do you just wait for the movement to happen and then you start looking for executions?
Okay, well, there's a couple of things that go on in the mornings, as you know. You've got data at 7. Well, depends what. Let's talk New York time. So everyone knows where we are.
Sure.
New York Eastern time -5. You've got data 8:30, and then you've got equity open at 9:30. So you let those two volatility events happen, do what they want, etc. Because essentially it's just manipulation or liquidity injection or something like that. And then you start looking for setups at least, I would say, 20 minutes after equity open. Okay, and that's generally enough for them to do what they want to do, and then look for setups after that. So 9:50 Eastern.
Yeah, it's a very smart approach to wait those 20 to 30 minutes after the equity is open.
It's just a hunting ground, isn't it?
I'm guessing. Yeah, many days you will have also that half hour after equity is open. You will have some news. Are you trying to avoid that, or you don't care?
Yeah, no, I don't trade. If there's news, obviously I won't trade till after the news. So I'm not one of those people that will try and catch or forecast what a news event's going to do, because of course the news event will generally go in the opposite direction and then continue in whatever, just to kill everybody. So no, that would be my recommendation to everybody. Just wait for anything to happen. Data, equity open, and then reassess, and then start looking for a trade entry. And obviously everything you do, in my opinion, should be based on a higher time frame. So if you're a day trader executing on, say, a 1 minute or a 5, you should obviously be aware of what the hourly or daily structure is. So
Yeah, definitely. I'm curious. Do you so you have your bot that provides setups, and you decide whether to execute on them or not. Do you have also an evaluation system, or do you journal about how you did execute on that model compared to another model? Like, for example, do you evaluate your execution based on the model?
My not quite as sure I understood, but let me try and answer it anyway.
Yeah.
This
Yeah,
very
I can rephrase it.
specific.
I can rephrase it.
Go
I'm sorry.
on then, please. I might
Yeah,
give you a better answer then.
I was a little bit vague. So, yeah, do you have a way to decide whether you did your job well or not in the execution part? Because you are essentially receiving the models by your bots, which is
Mm,
good. And
mm-hmm,
your only job, your discretionary job, is just to execute on them. You can mechanicize it, yes,
mm-hmm,
or you couldn't. So the question is, do you mechanicize it? Like you still, when you execute in a mechanical way, or you try to scrap more space from the market each time?
What was the last one? Scrap, did you say?
Scrap more space, more pips. Do you
Oh, I
try
see
to?
what you mean. No, no,
Yeah,
no,
yeah.
no. Pretty strict about where I'm in and out from. So, as a my stop losses and take profit levels are not dictated necessarily by um, pips or points or whatever you want to call them. They are
Mhm.
going to be specific levels that are created by time in particular. So I will not, if a TP is hit, that's it. I'm out. I'm not a discretionary trader. I don't micromanage at all. I'm literally going to take stop where the trade's invalidated, or it's
Mhm.
going to hit profit, and then I'm out for the day, and that's it. As far as I'm concerned, it's a one. I don't do more than one trade a day. If it's successful, that's it. That's my day done.
Yeah, that's how traders in hedges work. Like they have their area for stop loss, area for take profit, and they're
Mm-hmm.
judged based on where they enter.
Mm-hmm.
Yeah, and you have a mechanical way also for your entry, right? You don't try to. Yeah,
Mm-hmm.
perfect.
Yeah, they're generally going to be some kind of opposing liquidity in ICT terms, or an opening price of something. Uh,
Mhm.
yeah. So okay.
So I imagine you beat psychology with this approach.
I had to. I had to because
Yeah.
that's what was killing me. Because
Mhm.
I'm not naturally a trader. In
Mhm.
fact, naturally I'm probably the worst trader.
I
I'm
think most people probably are. They're in the
yeah,
same boat.
yeah. I just can't do it. It just kills
Mm.
me.
Mm.
I got to the point back in 2016, 2017 where yeah, I couldn't sleep. I think I gave myself heart palpitations. It just yeah. I went yeah. As everybody knows, once you go through that sort of thing, then you just don't want you either stop trading and find another career, or you completely change what you do. So yeah,
Yeah, sweet. I can relate to that. So, yeah, thank you for sharing.
no, no
Leonardo, do you
worries.
want to kick off with the last questions?
Yeah.
No, I was talking about you have so nice moment. I hear so nice uh stories about your trading journey, but now I want to hear about your bad moments, your dark moments. And I think you, as many traders, you face like so much challenge in the trading.
Mm-hmm.
I want to know what kind of challenge do you have to go through about that, and how do you handle them? How you passed about that bad moments, and I
Mm-hmm.
think like so
Mm-hmm.
much shares it was so difficult about that.
Mm-hmm. Okay. Well, basically, yeah, it was starting. Obviously, the trading career was typical start of a trading career. Lost a reasonable amount of money, personal funds. So then I had to change. There was there's no question about it. I had to find either a different career or some kind of way of trading that didn't involve me personally being in charge of it. Um, so yeah, I think everyone has to go through it. You have to lose money. It's the price of becoming profitable. It's just the gate entry, whatever the ticket. You lose money. You learn a lot about yourself. Whether you're can you. I'm sure there are people out there who are very good discretionary traders who've got a very disciplined mindset naturally, but that's not me. In my previous careers, I didn't have to be disciplined, so I never learnt that you had to be disciplined to be successful. And I think if you come from a disciplined background or a disciplined previous career, then you probably will naturally be a very good trader. But that wasn't me. I was lucky.
Yeah.
I I I had a career and a job that didn't require discipline, but trading does, as we all know. So the point I'm trying to make is I had to change, and mechanical trading was the way. And I think that goes for a lot of people, to be honest with you, because most people, I'm assuming, aren't disciplined, because we don't have to be in this world, do we?
Yeah.
Particularly.
I think that's the irony of this industry, right? Most people come to trading for freedom, but
Yeah.
it's the amount of freedom which is usually people's biggest hindrance, right?
Yeah.
They don't have the process, they don't have the managers or the risk managers or the clients. There's nobody to keep them accountable. And when you're left to do what you like, you're almost your own biggest enemy.
It's a recipe for disaster, to be honest, for most
100%.
people. So that's why prop's great, because it instills those rules. So, and it protects your own money. So
And about the person who was with the people who was around you, what they was thinking about you was with the dream to be a profitable trader. You was like people who believe in you.
Yeah, it was difficult. I think everybody has, and initially, obviously, it's everyone's up for it. Yeah, it's like, go and make a load of money trading. Of course, everyone's positive at the start, but then obviously a year down the line or whatever, 2 years down the line, and things are not going too well, then they start to become negative. But my family was supportive, and I mean, you need.
Yeah, but I think you don't have so much. You don't have so much time that people of your family is supporting to you. Maybe when you're a trader, the person or the people who are around you is saying like, "What are you doing? Why you don't find a nice work or a good job like usual work? Because we will be safe to you, you know."
Yeah. Oh yeah, I mean it's natural, isn't it, for everyone to be concerned around you that you're going down this alternative path to what the system has in mind for everybody. Most people are happy, 9 to 5. That's what they were given. That's what they expected. It works for a lot of people. They like the consistency of it. They like the security. It's there for them. Security.
Security is the big one.
Yeah. And we naturally are not, because of the way we are educated and the way the world is these days. Unfortunately, we are very risk adverse.
Yeah.
For a reason. It's Pietro smiling. I know.
Yeah,
so,
I think with the COVID, so much person knows about nothing is secure. If you have a good work, my dad lost his work when it was COVID, so it was maybe 25 years old in that work. So it's like you can just lose your job and you can start a new business and you can lose all your money. So it's all about your risk.
Yeah, exactly. So most people are not. They're not naturally made for trading from that angle, unfortunately, because they've been exposed to such.
Yeah. So about that bad moments, how you keep motivated about that? So
luckily I found at that time a good mentor, and you need somebody. You need luck, I guess, is a certain part of it. To find somebody who is genuine and you can relate with, and I was lucky I found somebody, so that kept me going during that period of that period of my trading career. So a mentorship. I mean, I know mentorships are frowned upon because there are so many poor quality ones, in Pietro's words, but if you can find somebody, it is the way, it is the answer. Because it's a struggle by yourself, to be honest with you. You can waste a lot of time, you can waste a lot of money, and you need some help in this career, in this path. Yeah.
I just want to add to that. I almost think in this day and age, a lot of the knowledge that you need is out there. You can probably get for free in this day and age. A lot of what you get for mentorship, which I think is overlooked, and I obviously put a lot of emphasis on this from the coaching perspective, but it's accountability, right? When you're trying to be a retail trader doing it by yourself, you have no risk managers, you have nobody to be accountable to. It's very, very difficult to stay the course and do the things that you're supposed to do. but having that level of accountability to a mentor, to a group, to a community, to a partner, whatever it is very, very helpful.
Yeah, no, that's one thing that my mentor actually insisted on, was he was able to see my trades in real time. He could see what I was doing. If I took a trade, he got to see this, and I was like, wow. And it's amazing what that does to you when you know somebody's watching, and you're like, well, I better not take that trade because that's actually rubbish. Well, that doesn't follow the system that I'm supposed to be trading. So why am I even thinking about it? So yeah, no, the mentor from that third party coming at you, going, "What are you doing?" You know, giving you a slap around the face, maybe, but maybe not too far, but
Yeah. And may I add something? I also think that the situation nowadays is like it is because all the attention is drawn, of course, to results, but people don't know how to discern results. So, for example, there are many people posting payouts, and it's fine, it's results, but by not people are drawn just are attracted to the monetary result and not by the process. So most people don't even show the process. That's what actually helped me off posting the payouts. The only one that I posted was the one that I was interviewed by my FundedFX. By then, I had to post that because it was public. But the others, I didn't want to mix myself because I didn't have the interested in explaining how because I wasn't teaching. And so I haven't like posted any payout, but I see a lot of people posting payouts, not explaining process and getting a lot of following just for that. So a lot of attention is drawn to that, and it may be they may be doing it for good purposes or bad purposes. We don't know, but the attention is naturally drawn to that. That's what caused all this low quality mentorships. We can say because nowadays we can just post the payouts and you get people buying your mentorship. Yes, but I agree with you, Simon. A game changer is finding somebody that genuinely wants to help you. And that can be achieved either, of course, by paying, but it's the lowest quality of win-win, or working together. I have a mentor now, and we work together very closely on other stuff, and he's mentoring me in trading. And because it's a win-win, because we are partners now, that's what makes the relationship genuine. And without that, without a true mentor that wants to help you, and because of course there's a win-win, otherwise he won't help you. I think it's very hard to come up in trading these days.
Yeah, no, that's good. That's like that, isn't it? If you could partner with somebody, yes, I agree. There's a objective for everybody there, isn't there? Everyone's happy. So nice. Yeah, I agree.
Cool. Leonardo, did you have anything else, or you happy to wind things down?
I hear the story from Simon.
Cool. Simon, do you have a normal way that you want to end these sort of interviews, or?
Not really. Just like thank you all for taking the time and for good. Nice to meet you all.
I know. I think we're all probably familiar with each other's faces, but never actually got to sit down and have a conversation. It's been good.
No. You've been doing some events in London, I think. Is that right? In
the last big one we did, me and Pietro were in Paris.
Yeah.
We did the global meetup in Paris, which was good fun.
Yeah.
Good fun.
I saw you in the studio in
podcast in London too. You were referring to that. Yeah, we did in London too.
Studio in London. I think I was due to come down. I couldn't make it.
Yes. We're doing the Risk Reward Radio, the podcast.
Yeah, look, it's
We've
good.
got to get you down. We've got to have a good conversation in person.
September, anytime
Sounds
after
good.
the summer, that'd be great.
Sounds
all right, guys.
good.
Well, I will stop the recording. I think that's probably enough for those guys to edit. And nice to meet you all, and hopefully speak to you guys or meet you in person maybe one day.
For sure.
All right, chaps.
Take care, man.
for hosting.
Thank you.
See you.
Thank you so much, Simon.
Bye.